All right. We'll give a couple of minutes for everybody to join us. Good morning, everybody. Super excited to be here this morning and have you guys all joining us. While I get started and while we give everybody a few minutes to join us, I like to have a little bit of fun. Those of you that know me and have seen me do some other things, you've probably seen me do this before. But I like to do a little bit of trivia while we wait in the morning to get everybody going, make sure the chat's working, everybody can see us and hear us and all of those sort of things. And we're going to test Gemma's knowledge a little bit. Are you ready for this, Gemma? I told you about this. All right, well, we'll go ahead and get started. So the first trivia question that we have here today, actually everything that we're going to talk about today is around mortgage manufacturing. And so hey, Kelly, all of our questions, our trivia questions are centered around manufacturing. So a little bit of a hint for everybody. So first question, in what year did Henry Ford innovate automobile manufacturing by introducing the moving assembly line? Hey, Jen. Hey, Dana. What do you guys think? Gemma, what do you think? What's your guess on the year that Henry Ford kind of innovated automobile manufacturing and started with that moving assembly line?
I'm stuck somewhere around the early part of the 1900s and the very end of the 1800s.
Oh, wow. Okay. Well, we've got a couple of guesses in the chat. Julie says 1909, Reza says 1913. Reza, you actually got it. It was 1913. That was awesome. Congrats. So, yep, 1913 it is. David, you got it too.
Yay for ChatGPT.
Yeah, lots of 1913s. I love it. Okay, second question. Also by another automobile manufacturing company, in what year did lean manufacturing principles emerge? This one's a little controversial, so we'll see what dates come up with. Gemma, what do you think?
I mean, I may have researched this the other day.
All right.
We'll see what our friends say first.
Okay. What does everybody think? In what year did another automobile manufacturer, I'll give you a hint. In what year did Toyota emerge with lean manufacturing principles? Everybody's typing furiously. I know it. Let's see ChatGPT just going. Kelly, what do you think? Jen, Dana, 1950s. Man, Reza, you are awesome. Okay. Yeah, actually, you got it twice in a row. 1950 is the date that is in here. But it actually, there's a lot of controversy on this for a couple of reasons. It didn't actually come to the United States and really start taking off here until there's a book that came to the US. And that came here in the 1990s. So there is a lot of, it started to really take off in the 70s and 80s and then really come to the United States in the 90s. And so there are lots of different dates around lean manufacturing, but we're going to go with 1950 because that is when Toyota really started to invest in lean manufacturing. So, all right, now that we have everybody with us, we are going to go ahead and get things kicked off. In case we have not met before, my name is Melissa Langdale, and I am the founder and CEO of Praxis Lending Solutions. And we are a premier consultancy firm, really on a mission to leverage technology and intentional workflow design to lower the cost of origination, as well as providing greater elasticity to just better respond to those market-induced volume fluctuations that we know every lender has. So if you are at a company that has some of those challenges, or if there's ways that we can help, that's what I am here for. And I am joined this week by Gemma Paciano. Gemma actually has 23 years in mortgage lending. She is a powerhouse of operational strategy and innovation. She currently serves as the Chief Innovation Officer for Legend Lending. She's led teams through exponential growth. She champions technology-driven transformation, and she's known for blending compliance with creativity, which I know is really rare. Outside the office, she is a proud mom, a kindness advocate, and a firm believer that mortgage closings should come with less stress and more education. So we are in for a treat today. Gemma, thank you so much for joining us.
And thank you for the super kind introduction. I do want to add one fun fact about me and Melissa.
Okay.
We did go to college together. We didn't know each other at college, which is kind of funny. But this would not be a proper introduction if we didn't give a shameless plug for our Clemson Tigers. And look at us 24 years later together and collaborating and, driving the same passion for our industry.
I love it. I love it. Go Tigers. Yes, absolutely. And if you are not a Tiger fan and would like to put in a shameless plug for your university, we would love to hear it. Love to hear where everybody's hearts are at. I know Gemma and I bleed orange, but I am sure there are other colors in there as well. All right. Well, I'll go ahead and kick us off. So, really today's theme, this is the first week of a 6-week series that we have on the future of mortgage banking. And so it's called Future Proof, very intentionally. And really it's to prepare the industry for what could be coming. And so we're going to talk a lot today about manufacturing and the history or the future of mortgage manufacturing. But in the coming weeks, we have a couple of other great sources of content. So lots of jam-packed content coming in the next couple of weeks. The second week, next week, is going to be high tech and high touch solutions. And I'll be joined by Dave Savage and Michael Jones for that. Our third week is all about AI. We're going to dig into the risk, the reward, how to actually calculate an ROI or find an ROI on some of those AI solutions. And that week, I have the privilege of being joined by Shashank Shaker as well as Mark Cunningham. The fourth week, we're actually going to talk about the future of mortgage regulation. And that week, I'm going to be joined by Taylor Stork and Greg Shear. So I know it's going to be an awesome conversation. The fifth week is going to be on maximizing tech adoption. And that week, we're going to be joined by by Randall Gillespie, as well as Brian View. And then the last week of our series is going to be about preparing your company for the next generation of home buyer, but also the next generation of mortgage professional. And that week, I'm going to be joined by Jake Vermillion and Kristen Messerly. So lots of great content over this 6-week series, but we'll go ahead and dig into what we're here to accomplish today, which is to talk about the future of mortgage manufacturing. So this is going to be a little different than most other conversations. If you've ever seen me on any of these kind of live streams, this is going to be a little bit more presentation-like, but it's mostly because of the type of content that we're going to go through today. Today, we're going to talk about the history of manufacturing, and I promise not to make this boring. In fact, if you think I'm going off the rails and this is so boring, I want you to put it in the chat. I will be watching, and I promise y'all are like, oh my gosh, Melissa, this is way too much. I'm going to keep it high level, and we'll keep it as fun as possible. So history of manufacturing, then we're going to kind of level set with what do consumers, what do our referral partners, what do our teams expect of our mortgage companies and as us as leaders? We're going to level set on what our manufacturing process looks like today for mortgages. Then Jim is going to help us dream a little bit in our world of unicorns and rainbows, where everything and anything is possible and the perfect borrower comes into our world. She's going to help us dream around what that process looks like. And then we're going to talk about kind of bridging that gap between where we're at today and what's fully possible with mortgage manufacturing in the future. And for that, hold on to your hats. I'm actually going to show you a framework for task-based workflows and how to implement that within your organizations. And then we'll open it up for questions for everybody. I will tell you, we will take questions throughout, so please put them in the chat. I'll make sure to get them answered as we go throughout. If something crazy happens and we can't get to your question that you really had a burning desire to learn, I promise we'll follow up with you afterwards if we can't get to it here. So, everybody ready? Let's go ahead and get started. All right. Let's talk a little bit about history. So if y'all remember, right, we're gonna jump back in time to 1913, where Henry Ford kind of took actually what was a moving assembly line that he actually learned from another industry. Funny enough, most people think Henry Ford actually invented the automobile. He actually didn't. Most people think he invented this kind of moving assembly line. He actually didn't do that either. That was actually already established and working actually for slaughterhouses, as gross as that may seem. But Henry Ford did a great job of learning from other industries and what was working for them. And so he took this, what he learned from slaughterhouses, and he put it into his automobile manufacturing plant. And so as y'all know, moving assembly lines, right? You have your car on the assembly line, and the car kind of slowly moves. You've got people on opposite ends of the conveyor belt kind of assembling the car as it goes down the line. And the idea behind this really was to be able to produce cars at an astonishing rate. And he was absolutely able to accomplish that. But one thing that I think is really applicable to our world that came out of this is he actually found out that his workers were really bored. They ended up only completing one part of the car, right? Rather than having the car sitting in one location where they were all kind of coming at the car with various parts and needs, they were only tasked with completing this one very specific piece of the car. He also found out that the workers were really struggling with moving at the pace that conveyor belt was moving at. And so they were actually producing cars that were missing parts. So the workers were frustrated. They were frustrated because they were bored. They were frustrated because they were, not keeping up with the pace that they saw this kind of conveyor belt moving at. And they actually started to leave for their competition, which I think is an important lesson for us all to understand. But Ford leaned in and he created actually this really unique compensation model, which was a profit sharing payment for workers, which actually doubled their compensation per day. So it was a huge thing back then. Actually, Ford received a ton of slack. Everybody thought it was going to bankrupt his company to lean in, but actually the opposite occurred. He became more profitable. He produced more cars. His teammates were happier and healthier, and they stayed for longer. And all of that allowed him to not only produce more cars, but be more profitable at the same time. So 2 key takeaways from Ford. One, sometimes looking at what other industries are doing can be really helpful as we start to rethink how we operate. 2, make sure that your team is moving along with you as you're considering these big, massive changes. People want to feel like they're a part of something bigger than themselves and that they're fairly compensated for their work. And so those are 2 really big things that I think are super helpful for our industry as we think about big shifts and big changes. All right, so back in 1913, we're going to take a leap forward in history to the 1950s. We're going to talk about lean manufacturing principles, and I'm not going to get super deep into here. We're going to stay really high level for everybody, just so that y'all can see some core concepts of what lean manufacturing is all about. This actually emerged from Toyota, and so another car manufacturer, go figure. They had taken this kind of conveyor belt process that Henry Ford had built, but they had a very unique problem. They actually had an inventory problem. As you can imagine, right, America has a lot of land, and so did not have a problem was storage of cars. He could produce cars at a massive rate, and then based on how customers were needing things, he could just store it and then ship it. And so it was much easier here to be able to operate in his way. Well, Japan, as y'all know, has a much smaller landmass. And so they really struggled with inventory. So Toyota kind of leaned in and started to think differently about manufacturing and came up with this concept of lean manufacturing, which really is all about kind of minimizing waste, maximizing efficiency. They created this kind of just-in-time production, which is really only producing what's needed. And there's this kind of core concept around lean that is really kind of a push or a pull system. You'll see this a lot if you really study lean. The best way that I know how to kind of apply this to our space or create kind of a real model for us to understand this push versus pull model is actually the restaurant world. So if you guys have ever been to a restaurant, I know everybody has, you've been to a restaurant, you sit down, and a waiter goes back and forth between you and the kitchen, right? You order the food, the kitchen makes the food, they bring it back. Well, during that time, if you think about the restaurant perspective, they're only manufacturing what you raise your hand and say that I want to eat. Like there's no excess food that they're, creating for you. But there's a pretty significant wait period in between when you say that you want something and when the kitchen produces it in that particular case, right? So restaurants are, helping to keep you happy during that time by, bringing you bread and refilling your drinks and all of those sort of things so that you kind of don't, you don't see that or don't see that wait as a frustrating time period. Well, in a pull system, so that's more of a push system. In a pull system, you can think about more like a buffet where the customer is able to kind of self-serve. The restaurant is able to produce in small batches food that can come and be ready for the customer whenever they want it. And so this kind of push-pull concept is often described in lean manufacturing and is something kind of unique and something that I think we could kind of take into our mortgage world too. There also is a big theme in lean manufacturing around continuous improvement. And we won't get into all of the themes around kind of Kaizen because, we just don't have enough time today. If y'all want to nerd out on this, you just send me a note afterwards and I'll nerd out on it with you. But there's this whole concept of continuous improvement that just says, hey, we want to measure everything that we do. We want to be able to continually improve on what we do and how we do it. And this whole concept really started to gain traction in the 70s and 80s, and it really came to the US, like I said earlier, in the 90s. There are some specific things that go into lean manufacturing, but it really is more around philosophies. And the two big things to understand here are really kind of continuous improvement and this idea around waste reduction. All right, so we're in the 50s to like the 90s. We're going to transition over into the early 2000s and talk about agile manufacturing or agile principles. And this was really where software developers started to kind of lean in and say, hey, what we're doing doesn't really work. At the time, if you remember back then, I'm sure most of you do, like mostly hardware was being developed. Software had just started to really start to emerge. And the way that they developed it is they recognized a problem and then they planned extensively around how to solve for this problem. Then they executed on their plan and then they delivered a product to the consumer. But unfortunately, it's pretty complex what has to happen when you're producing software, right? And so there was this lag of time that they recognized that customer needs or the actual problem that they were solving for might actually change during the time that they were producing the software. And so they kind of leaned in and said, hey, there's got to be a better way for this. And so they kind of created this agile manifesto with a couple of core principles. One of the core principles has to do with collaboration and iterative development. And this whole concept was around kind of having multiple people working on solving a problem together and recognizing that that problem might might migrate or might change over the course of the development. But having people kind of work together towards that. Then it kind of said, hey, we want to actually break down how we do things very differently. And so it broke down how they produce software to these kind of big rocks, which are kind of the themes of what they were trying to solve for. Then they produce kind of small or they broke that down into smaller batches of work that had to be accomplished in order to produce that big rock. And then they broke down within those smaller batches individual tasks that had to be created or had to be accomplished in order to accomplish that small batch and in order to accomplish the bigger kind of rock. And so I want everybody to understand kind of that works with the agile mindset. There also is a prioritization component that comes with how they thought about manufacturing software, particularly that said, hey, we want to prioritize the things that we roll out based on the complexity of the work as well as the customer need. And that can easily apply to our space too, right? The one theme that kind of goes back and forth between kind of lean and agile, and it's one of the reasons that these terms often kind of get used interchangeably, is this constant kind of feedback loop and this constant kind of improvement, this focus on taking customer feedback, taking internal team feedback, and continuing to improve how you're doing what you're doing. So this whole agile framework is really, these principles have been adopted not only by software, but also by construction, healthcare industries, and some others that are out there. So this is, a lot of industries have started to kind of lean into how they produce things with both lean and agile kind of manufacturing and principles in mind. So a couple of big themes from this, as y'all can imagine, that I think would be important for everybody to take as we lean into what's possible in the future of mortgage manufacturing is this whole concept of collaboration. How more than one thing can be done at a time, how more than one person can be working in a loan file at one time, I think is really important. This whole concept of continuous improvement and understanding and measuring every part of our process, and then continuing to find ways to tweak and create incremental value and incremental improvement in each one of those areas, I think is also really, really important. I think the whole concept of prioritizing based on complexity, and in our world, maybe that's complexity of loan file or complexity of task, but also by customer need, I think is really, really important. This whole lean concept of push and pull that we talked about creates this openness to understanding that customers can actually self-serve a part of the process. And y'all have seen that with POS platforms that are out there right now, where a customer is actually entering in a bunch of information up front, and we're not necessarily having to do that for them. But I think we can find, and we'll talk about later on today, some opportunities for customers to feel confident and comfortable with self-serving at various points in the process. And then how we manufacture loans, which we're going to talk about in the task-based workflow, I think we can think about very differently because we can start to break it down into these bigger rocks and smaller batches and tasks and create some efficiencies within our model. So before we dig into all these details and how it's going to exactly apply to mortgage, also because y'all have heard me talk for way too long at this point, we're going to baseline and transition into what do customers, what do our team, what does referral partners, what do they all really expect from that? So Gemma, I'm going to ask you to kind of dig into that. I know you have a lot of expertise in this space, so looking forward to hearing it.
Yeah, and we had a little bit of feedback, Melissa. So what I did while you were talking is I muted because I think my speaker and you were they were hearing that. So if they hear it again, it might be we might need you to mute on your side so they're not hearing your speaker. But anyways, thank you so much for having me, Melissa. Super excited about this collaboration and just the entire series. It's something that I'm generally very passionate about, and I feel like sometimes I'm a broken record out there on social. just talking about these different pieces over and over. And so I love that you've put this together and invited me to be a part of it. But customer expectations, I feel like this is such an interesting topic and one that I think about often. Most customers seem to have one of three expectations when it comes to mortgage specifically. Historically, a customer's expectation of how their mortgage transaction might go is either what their friends and family have told them or the memory of their most recent transaction. Because mortgage is such a complex process for the customer, they really lean on what people are telling them in the community or their memory of that last transaction that they had. But I think now we have a new expectation, a third one that we need to think about, and that's technology and how technology can enhance our mortgage process. Specifically, things related to speed and simplicity and transparency of that process. Consumers are becoming more and more focused on technology experiences in general when they have a need. And this is what some people might call the Amazon effect. They're now expecting an instant feedback loop. In other words, instant gratification that technology can provide. And so there is an entire sector of our communities that do think technology when they think about anything that they're about to do, but especially a major process like buying a home or getting a mortgage. So I think we really need to lean into how we can inject technology into that manufacturing process that Melissa's talking about, and the concepts of what the best manufacturing process is. I think what's really wild to me is realtors are still out there saying all they want is someone to answer the phone. And I say that from experience. Melissa knows I actually go out on the weekends and talk to realtors specifically in my community. I like to stay close to, just the roots of what a salesperson is doing. And honestly, realtors say to me that they just want a lender who answers the phone. And I think we need to move past just answering phones. So imagine being able to walk into a realtor's office or any referral partner and say, yes, we're going to offer a wow-worthy customer service, but we're also going to do that with a tech-forward, streamlined process. Because let's be real, most lenders are not talking about technology with the referral partners. If you really want to stand out, start that conversation. Show them how your company is actually advancing and how that translates into an elevated experience for our borrowers. And I think as salespeople, they're always looking for a way to strike up a conversation with their referral partners. We all know rates and products are just kind of a dying conversation. And so what makes us unique, and everything in our world is technology. And I really think that that could be something that's a profound conversation that we're having with people in our communities. At the end of the day, it is our job to be more than just a lender. We are our customer's financial advisor. We're their human advisor, and we're the ones that give them the experience that they will remember. Remember, we just talked about a customer's expectations. And so now through technology, we can provide that experience they will remember, and they'll share with their family and friends. And this is where the real win is. You're creating a pipeline of customers for life by advancing your technology mindset, by advancing your manufacturing process mindset. And I think we need to take that one step further and talk about the benefits of a tech-forward process for our organizations, for us as mortgage lenders. We need less manual processes. We need clearer decision paths. We need more cost-effective lending. And some examples are as simple as removing manual processes, removing the stare and compare tasks, and removing redundant tasks from that manufacturing process. And this is where source data, OCR technology, and robotic automation come into play. Really, I think what we're trying to demonstrate today is how technology benefits everyone. It benefits our consumers, it benefits our referral partners, it benefits us as lenders. So the real question becomes, how do we deliver the kind of memorable experience to our borrowers while also providing great customer service to our referral partners and an efficient and cost-effective manufacturing process for our companies, for our ops teams, for our sales teams. And this is, I think, exactly the premise of why Melissa created this series. Our number one job is to serve our customers, but we also need to find a way to make lending affordable. Have all been talking about this obsessively, the cost to fund a loan, the cost to close a loan. And we need to really get serious about how we can become more efficient. And I truly think that that answer is technology. So now we're tasked with rethinking the manufacturing process because we're injecting technology into it. And when we have historically thrown bodies at tasks, we now have to say, what are those tasks that can be replaced by technology while still leaving that human element in lending and still being the face of what our consumers see, but having a more efficient, cost-effective process for everyone.
I love it. Oh my gosh, so much fun. So like, consumers are wanting, like you said, Gemma, this kind of instant gratification, they don't understand why they can order something on Amazon on their phone, right? Have it delivered in 2 hours, but it still takes 30 days to get through the mortgage process. And so I think this is our point. This is the whole reason, like you said, that we've kind of leaned into this series, is to help folks to kind of think bigger and broader around what's possible in the industry and how to actually get a return on some of the technology investments that are in our space right now. From a customer experience perspective, I mean, your LOs are answering the phone at all hours of the night or on weekends. There's ways for customers to get the information that they want and to help self-serve, especially around generative AI and what's possible with that in multiple languages at any time of the day, to be able to serve them and give them kind of an instant feedback loop. So super excited about that.
Awesome. I think I'll say one more thing on that topic. I think the neat thing about all of this in bringing it to the forefront is the technology's there. It's just getting everybody comfortable using it. So we have a lot of those technologies. Now it's getting serious and saying, hey guys, we need to start using this. And that comes with rebuilding the process and understanding how to really effectively use it.
Well, but like you said, it's expensive, right? And I'm gonna transition us a little bit into just a baseline of how we manufacture loans today. So I'm gonna share my screen with you guys real quick. Hold on 1 second. All right. Hold on. Let me make sure I can do this. Let's see if it's coming through. Can you guys see that or no? No. All right, hold on. Dagnabbit. Oh, there we go. I figured out it was my fault. New system. I'm learning. Okay, I'll just ask for grace. So this is an example of today's manufacturing process, right? You guys have all seen this. If you use kind of the bigger LOSs that are out there, you've seen these kind of milestones in the process. But a couple things I want to point out to everybody that's here. You can see these the milestones that are here, right? The lead to pre-application to application to processing. There's a gap in between each one of these milestones intentionally, because oftentimes as we're moving these files back and forth, we actually have a gap because that new person has to pick up the file. They have to see everything that we have done in that file since either the last time they touched it or since kind of the beginning of time, right? But it also has to wait and be in their queue for the next opportunity for them to get to that loan file. And so there often is these gaps in points in time where we're just waiting on somebody to pick it up and then also somebody to catch up on the loan file. But there's also points in time where we kind of circle and stall. So between processing and underwriting, for example, right? Those processor sends it into an underwriter who needs more conditions, who goes back to the processor who gets it back into underwriting. And there might be this kind of circular kind of stalling process in that particular part of the process. So this is not something new, but I wanted to kind of give a visual to everybody to see this very linear process that we operate in, and how some of those gaps in how we hand back and forth loan files to one another can really create some challenges for our industry. Now, we know why we operate this way. We operate this way for a lot of reasons. One being the technology that we have today was really built back when we actually passed paper files back and forth to one another. And so it is there to kind of facilitate and create an outlet for us to be able to do that. But unfortunately, we no longer need to have paper files passed back and forth to one another. And there are better and faster ways of manufacturing a loan file. But also, we unfortunately have siloed data points. So Gemma's going to talk in a little bit about kind of the future of what's possible around source data. But also we recognize that our verifications, right? This is why most of you have waterfalls in your technology platforms, right? You don't just go to one verification provider because they cover the entire country from a verification perspective. You have probably 3 or 4 because this employer only subscribes to this particular data source and this one is with this one, right? And so you have to kind of, you recognize that you have to have flexibility in your process to create kind of an opportunity to capture each one of those kind of data sources. So we kind of have siloed data sources. We also have some legacy kind of tech stack limitations, but we also, frankly, have regulatory pressures that we know are reinforcing that traditional process. We can't solve for that overnight, but we can take what's in front of us and create some operational efficiencies that can, as Gemma said, give customers, give our team, give our referral partners more of what they're looking for in the process. And so I'm going to stop sharing real quick. And Gemma, you're going to take it from here and talk a little bit about, the power of source data, but also kind of what's possible in the manufacturing process in a world of unicorns and rainbows where we had kind of no limitations and could have that perfect borrower that could be leveraged at every point in the process. What's possible from a manufacturing perspective?
First, I do want to say something funny. Me and Melissa have had these conversations at a nauseum, like just for the fun of it. And a meme just popped into my head, like I should, go create this meme whereby you click the submit to processing, it date and time stamps it, and then the clock's ticking. And everybody says, what's the status of my file? It's in line in processing. It's in line in underwriting. It's in line in closing. Like we spend a lot of times in this linear line, like waiting in line based off a date and time stamp when somebody clicked that button, submit to underwriting. And so I just was giggling as you were talking about that. And I think of all our conversations we've had on this that hasn't like hit me, but I was like, it's so true. Like you submit or you package it up and you mail it if you're talking 20 years ago and you're just in line. You're in this linear line waiting for someone to pick it up because that's the prescribed next step in the process. So anyways, thought that would be a good giggle. So source data. I am going to try not to talk about this for about 3 hours because I totally could. But anyone who follows me on LinkedIn, anyone who has spent more than 5 minutes talking to me over the past few years knows my passion and excitement for the utilization of source data. As Melissa likes to say, I live in a universe of unicorn and rainbows, but I think that we can all make it a reality really quickly. And I just want to talk about, kind of my history and where my passion built, but then also just like the brass tacks of what source data is. This is not a new passion for me. If I think back to when this all started, it was roughly 7 years ago. I was working for a lender who was an early adopter, really an early tester for Fannie Mae and day one certainty. And as the months and years passed, our sales and ops team really embraced that concept of day one certainty. So I feel like Fannie was like the purveyor of this concept. And then eventually Freddie Mac came out with AIM. And we were just using it like a well-oiled machine. We're also just generally using that source data documents for any type of loan. It didn't have to be conventional, although conventional had some benefits with it. you can use these source data documents for any loan, FHA, VA, USDA, jumbo, most any of your aggregators, everyone's accepting it. And we got to a point where literally 75% of our loans were utilizing asset transcripts. And I feel like that's the easiest explanation of source data is what using an asset transcript. I think everybody has an idea of what an asset transcript is. This equated into hundreds of loans a month. So this isn't just we had 1 or 2 loan officers testing it. We had hundreds of loans a month closing with these source data documents. And we got to a point where we had a culture of loan officers that couldn't even imagine asking their borrower for a bank statement. When you have to ask your borrower for a bank statement, it becomes this domino effect of additional stuff you have to ask for. I need 2 months. I need all numbered pages. Now I need a transaction history to show your gift has cleared, your earnest money is cleared, your next payroll deposit, your 401k loan. All of that is deleted from the process. So all of that time spent, those conversations had, are totally deleted from the process. And so we had loan officers that just bought into that culture of, this is amazing. Like, I'm not having to have these awkward conversations with our customers. I think one of the most impactful statements that I heard 7 years ago was the phrase, the 7-second underwrite. This has stuck with me for years. I think this kind of goes back to the story of maybe Ford and how many years these things actually take to transpire. But what that means to me is the ability to instantly pull a borrower's credit, income, asset, employment data within seconds. And then within seconds, you're rendering a credit decision. We are not there yet. It has been 7 years later since I've heard that phrase, but I have not let go of that phrase. Like, whoever was talking to me explained it as like the borrower swipes their driver's license and within 7 seconds, they have a credit decision. I truly think that we are getting closer and closer to that. And that is why I talk about source data so much. And it's really my mission for everyone to start adopting source data now so that they can build that same passion before it becomes a have to. So I explain source data just kind of how I explain that 7-second underwrite phrase. Source data comes directly from the source. So your banking information is coming directly from the financial institution. Your income information is coming directly from the IRS, directly from the employer. Your employment verification is coming directly from the employer itself. And this really doesn't scratch the surface of what source data is capable of. But if we're just really talking high level categories, the 4 or 5 main categories that we all know go into the transaction, but there's so much more layered pieces whereby that source data can come in and really get us to a credit decision much quicker. I think what strikes me so important to the implementation of this now is it eliminates the need to develop technologies to review bank statements, pay stubs, W-2s. So we are now taking that bandwidth that would be spent on building technology to read a bank statement or to calculate income when it's already there. The source data is coming in. The vendors who are supplying that data are lots of times already creating a summary. And I think that that's what a lot of people are doing with OCR or robots is they're saying, let me read this bank statement. Let me get a summary of large deposits, non-sufficient funds, all the things. And the source data vendors are already doing that. So they're not only providing the source data, but they're giving you a summary. They're saying, here's your large deposits, here's your non-sufficient funds, here's your average balances, all on a summary sheet. And then for conventional loans, it goes one step further, whereby AUS is actually reading that and saying, hey, I see your large deposits. Now let me tell you which ones have to be sourced in season. And so I think we can remove all of the robots and OCR technology in that category, specifically in that credit decision category, and apply that bandwidth to other things in our manufacturing process. For example, compliance, secondary, post-closing, accounting, and HR. Whenever I start these conversations, people immediately lead with objections like, I post this stuff on Facebook, or not Facebook, I do Facebook, but I post this stuff on LinkedIn all the time. And literally the comments I get are the objections. What if my borrower doesn't feel comfortable with authorizing us to receive this information digitally? Or what if my borrower's employer or bank doesn't participate with the vendors providing this source information? And these are such great questions. I actually, again, giggle a little bit because we were there 7 years ago and they're so easy to overcome. Really, that first objection is what if my borrower? It's just mindset. Your borrowers are on, as Melissa said, your borrowers are on Amazon all day long. They like that instant gratification. If you're like, great news, I don't need a copy of your PDF bank statement, go to this authentication link and authenticate who you are, and I can get your bank statement instantly. Of course, they're going to say great. So we're not giving them the option. We're not saying, well, you could give me this or you could do this. It's more of, hey, great news. I've sent you a secure link, authenticate who you are, and your ex-bank will give me your banking information instantly. And I don't want you to think I'm oversimplifying this, but it really is that easy. We have accomplished this with hundreds of loans a month years ago. And that was before technology was so much in our face. I mean, I think technology has infinitely grown in every areas of our life in the past 2 to 3 years, probably since COVID specifically. But we overcame this objection 7 years ago. So I just think it's a mindset. And it's like anything else we do. You're going out to make a sales call and you have a negative mindset, or you're about to get on a, sales rally call, or just whatever it is. It's mindset. The borrowers don't know any different. They're like, hey, great, click of a button. I don't have to give you all these documents, that my neighbors told me I'd have to give you ad nauseum. So I think that one's super easy to overcome. The second objection related to, well, what if the bank doesn't participate? Again, I think that's an exaggeration. Our vendor partners have spent years, and I said this 7 years ago, and now they've had 7 years to do this. They have spent years contacting every single bank, every single credit union, every single rural area of our country, and they have got every single bank approved to participate. It is very rare that you find a bank that doesn't participate, or that you have an employer that we don't have some sort of avenue to get source data. It doesn't have to be through the work number, kind of the old way that we thought of. A lot of vendors are now pulling data directly from ADP or from Gusto or whoever the HR provider is. They're building relationships with these massive vendors that work directly with the employers to provide this source data. So I just think that saying, well, I don't know, I'm not going to try, my borrower's information isn't going to be there. It's just really an outdated mindset, and kind of what Melissa said with the waterfall. So now you have these vendors that are saying, we're going to check these different, VOE vendors. We're going to check these different HR portal vendor providers. And out of the, 5, 6, 7 things that we waterfall through, at a very high percentage, the borrower's information is coming back. And now we've gone one step further, whereby the GSEs now are coming out with calculators that the IRS data can automatically dump into. So now you've got your source data from the IRS, and you have a GSE calculator saying, hey, here's your calculation. Like, the technology is there. So I do want to be clear that source data does not solve for complex scenarios. It does not eliminate the need for human connections with our customers. It simply speeds up the process of obtaining the information we need to make a credit decision. So like, we spend so much of our manufacturing process on building data for a credit decision that we could take that entire sector and just scrunch it down. And then we're focusing our resources on sales or on compliance, which is kind of the elephant in the room, on all these things, these business practices. And we've taken probably 75% of our manufacturing process and squished it into one area. And there's so many other benefits outside of just fixing our manufacturing process. Paperwork reduction. So we all, have a 3 or 5 year timeline that we have to save paperwork. We now have the source data. We're streamlining processing and underwriting. That's That's shrinking the manufacturing process. We talked about, the GSE now giving us calculations on income, so we're not spending hours calculating our borrower's self-employed income. It virtually eliminates fraud, and this is something that I'm a huge champion of. The amount of money that we spend on QC, that we discover misrep, that in itself pays for doing the source data verifications. And so today, the GSEs, Fannie and Freddie, have in their written guidelines, if you're using source data, you don't have to QC a file. So you're eliminating a massive cost that we're all spending by just getting this source data. So you're cutting down on time, you're cutting down on QC, compliance costs. And then again, your GSEs are giving you reps and warrants. So you got the source data, the AUS read it, they know what the balances are on your asset statements, and now you have reps and warrants, gosh forbid the loan doesn't perform. And I think the punchline to all of this is now we've freed up the bandwidth so we can focus our technology initiatives on other areas that maybe don't have such instant solutions or currently working solutions. Really, I could talk about this for hours. Can you all please follow me on LinkedIn, because I literally talk about this every day. It is my baby. It is my passion. Melissa likes to say it's a world of unicorns and rainbows. I like to say this is the world we live in, and it's the real world. So I wish y'all would join me. If you have any questions, I literally could brainstorm with you on this for hours.
Yeah. Gemma and I get an opportunity to nerd out on this so much. And I'm going to show you, just in case y'all are visual people, I'll show you really what Gemma is talking about. So, that linear process that we all talked about just a little bit ago, basically when you have enough source data, you are doing all of those things at one time, right? You're taking that linear process and you're condensing what you're gathering at multiple points. And so you're capturing all of that here, but you're also doing it at multiple points in the process. And so it can create a lot of efficiencies, but it can also create a lot of opportunities for customers, referral partners to just have a better process altogether. So. All right, so I know a lot of lenders that I talk to right now are trying to figure out, I think they recognize the opportunity with task-based workflows, but they're trying to figure out what to do with that. So I am going to show you guys kind of a framework that I use with lenders. So let's just take a step back just a little bit. So we've talked about kind of how we operate today. We've talked about this kind of unicorns and rainbows reality that I hope we get to on all of our loans one day. But really, to bridge that gap, I believe that gap can be filled by leaning into some of the other manufacturing processes that we've talked about today. And I believe we can take some of those big kind of lean and agile principles and apply them to mortgage manufacturing. That'll help us to produce a more consistent, quicker, cleaner process that can better leverage technology that we have today, but then also better leverage technology that's coming in the future. And I think that task-based workflows are the answer and the key to that. I think if we can fully adopt task-based workflows, we're going to see clearer what our foundation is so that we have an opportunity to better identify and then remove redundant tasks. I think we can also, it's going to allow us to better leverage technology, like I said, that's available today, but then also position us to take advantage of technology that's coming in the future. Plugging tech, as y'all know, in that linear process right now, what we're doing as an industry, we take this kind of linear process and we say, hey, we're going to plug AI into this spot, or we're going to plug this piece of technology into this spot. And so all we're doing is seeing kind of an incremental boost in efficiency for that particular role. When we start to think about task-based workflows, though, we start to think about what the technology, how that technology can take responsibility and have authority to do that task, and therefore it gets eliminated from the roles that we have in place. I also think, though, It gives us the ability to make the choice for our organization, for our risk threshold, for our company goals to say, hey, we want technology to do this task, or we want people to do this task. And we can have a lot of flexibility in how we operate that when we break down everything we do into specific tasks. In addition to that, though, I think it also gives us the ability to better align our talent, our team, based on the tasks that are appropriate for their level of expertise. So it gives us this whole kind of concept of rethinking roles in the industry and aligning tasks based on specific skill sets and expertise. So I am going to show you an example of a framework for task-based workflow. I will tell you before we dig into this, just a little bit of a disclaimer. What I'm going to show you is one iteration. So it is just one example of a task-based workflow design. It is a framework. Y'all are all welcome to use it. It is a little bit of unicorns and rainbows because we do recognize that there are some technology solutions that do have limitations to some of this. And then just recognize it's up to you to decide how much of this you want to lean into, how much of it you want to just or you want to not try to implement. It's all up to you and your company's goals. So you are still also going to see some milestones. And so it doesn't eliminate this kind of process for mortgages, but it gives you the ability of eliminating some parts of the process and eliminating this traditional kind of handoff so that you can move on multiple things at the same time and actually be working in multiple milestones at the same time and alone. All right, everybody ready? All right, let me share my screen real quick. Oops, hold on. Here we go, here we go, here we go. Okay. It's coming, it's coming. There we go. All right, so you're going to see big giant buckets here. So I want you to think about each one of those buckets. So you see like borrower review, property review, loan eligibility. These are actually all the things that Fannie and Freddie say that we have to do in a loan file in order for it to be purchased by them. And so you're going to think about it in that kind of lean, agile mindset of these are the big rocks that have to be accomplished. And then we're going to batch within those rocks specific things. And then we're going to have within each one of those batches very specific tasks that have to be completed. So I am going to scroll in a little bit here so that you guys can all see this. I want you to look at this borrower review and property review very specifically. They have some color-coded dots in here, which I'll tell you about. But also, as you can see, the other components that are in here do not have color-coded dots, mainly because everybody's process, everybody's comfort level around whatever tasks are in their world, it's going to be up to you to decide what that looks like. So I am going to scroll in real quick into borrower review. Whoops, wrong way. Into borrower review so you guys can see this. So y'all know under borrower review, we have to analyze income, we have to analyze employment, we have to analyze credit, and we have to analyze assets. So let's take credit, for example. As y'all can see, we have to review their scores and trade lines and payment history and derogatory credit and all those sort of things, right? So you take these kind of components of this big batch and break out the tasks that would have to be completed in order for that to be able to be sold to Fannie and Freddie, right? And you can see that each one of these specific tasks is actually represented by a little dot. And those dots are actually color-coded for a very specific reason. You can take these tasks and then say, hey, this is a task that anybody off the street with minimal training can complete. Or this is a task that I need somebody to complete, but all they really know is how to do this one task. They don't have to have a broader knowledge of the process or a broader knowledge of the industry, but they're very specialized in doing this one very specific thing. Then you can have more complex tasks that really require a decision maker to complete them or a more experienced teammate to be able to complete them. And so it's up to you to decide what levels of complexity that you would like to have in this process. So you can start to build this out for your crud monkeys. Hold on. You can start to do this for your organizations at whatever, based on these particular buckets. So we've got all the tasks aligned for our organizations. Now we can start to rethink a little bit of our roles that we have that are completing this task. So today we have a processor that lives in the processing milestone, right? They complete all the things that live in this particular milestone. And the reason we haven't seen a lot of lift as an industry on the technology solutions that are in place is because we're giving that processor incremental efficiency gains. Rather than looking at eliminating complete tasks and having the processor do maybe some things in processing, but also maybe some things that would traditionally live in loan decision or underwriting, right? Depending on the skill set of that processor. And so it gives you the ability to kind of think about roles very differently. So I've got some examples here. You can do whatever you'd like with your organization. I am not suggesting that you completely redo every single role in your org. So take that for what it is, but I am suggesting that you can rethink based on skill set and have people kind of cross-trained across different parts of the process. So you can have somebody that's customer facing and very friendly but doesn't have a lot of training on being able to make the decision. You can have a specialist, an analyst, kind of an underwriter, loan officer. I do have AI in here because I like to talk about AI as an actual person for a lot of reasons. There's like training processes and those sort of things you have to go through that actually are very similar to what you do for a new employee, which we can get into later. So you can start to rethink your roles and how they're assigned to various tasks. Then I promised everybody was going to see these milestones. So I want you to think about all the tasks that are above here and what would need to be accomplished in order for each one of these milestones to be complete. Now, this is actually Gemma's idea. I want to make sure to give her credit for this. She had this brilliant idea of this visual of a tree. And so at points of the process, you're going to have tasks, you're going to have leaves of this tree that are going to be filled. And you're going to, but you're not going to complete that actual milestone until all the leaves of that tree are complete. So think about it. You could have, let's use income for an example. In pre-application, you can have W-2s and pay stub, or you can have that transcript that gives you all of the income data. So whether it's data or documents, technology could and should be able to tell you that you are ready to calculate income. And when you calculate income, that actually could be done by an underwriter at that very point in time, whether that underwriter be technology or a physical underwriter. It's up to you and your risk of your organization. So that is kind of the framework of all of this, taking kind of those big rocks, breaking it down into small batches and then tasks, and then taking those tasks and looking at where those would traditionally lie in the process in order for you to feel like that particular milestone was completed. So I know we are up at time and I want to be conscious of everybody's time that's here. If there are questions that you have, please put them in the chat for us. I know we're all up at time, so I will make sure to get back to you with some answers. Thank you all for joining us in our first week. This was very exciting, and I hope this was valuable for everybody as well. Next week, we're going to be back at the same time. We're going to talk about high tech and high touch solutions with Dave Savage and Michael Jones. And before we go today, I want to say a very special thank you to Gemma for joining us. Thank you for sharing your insights and for allowing me to nerd out with you on a very often basis. And so thank you for sharing all of that with us.
Thank you for having me, Melissa, and thank you for all the great energy in the chat. And I look forward to the future sessions.
All right, everybody. Have a fantastic rest of your afternoon. We'll see you back here again next week. Bye, everybody.
Bye.